Hello everyone, and welcome to Intelligent Trading Academy's webinar with me, Adrian Slack. Looking forward to speaking to some of you this evening, trading FX profitably on behalf of ATFX, our broker partnership. Tonight we'll be covering some slides and some areas where we see hopefully where we can teach you and show you some angles what you might not be seeing in the marketplace, and also maybe some new bits of analysis that we can try and help yourselves with. So who are we? We've traded over 40 years. I can see some of you now starting to join the webinar. Any questions, happy to try and answer as we go along. So anything you need clarifying, don't be scared to shout on the chat, no problem. So we've been trading for over 40 years, trading for some professional fund managers. We've been government backed for financing for some of our courses, and we've now taught over 500 people to create a community of traders looking for something slightly different. And we're definitely not trying to sell you a lifestyle or show you any lifestyle, and we're dedicated to try and offer the process of trading and the benefits of decent analysis and how you can maximize your potential by looking for solid trade ideas and setups. So who am I? My name's Adrian Slack. I've worked for various investment banks during my time. The majority was at Societe Generale, a big French investment bank, top tier. Was there for over 15 years trading FX, and majority was equities, market making and proprietary trading. So I understand the market movement and dynamics, and understand the fundamental side of the marketplace. Also, MSTA means I'm a member of the Society of Technical Analysts, and CFDs means I'm a certified financial technician. I have taught at the London School of Economics, the STA course. So anybody there might be worried about our credentials, we are here to try and help with all our badges and the right things that we've got. Our partner Kevin, he's slightly younger. He's traded for 14 years, does some decent manual analysis, a slightly different background from myself. He's worked within wealth management and interdealer brokers. He's qualified in investment risk and taxation, as well as being a qualified technical analysis, and is experienced in risk management, technical and fundamental analysis. All those kind of pots, fusing that together, will help you moving forward. It's always best to try and lean on somebody's shoulder when you're looking at trying to start something, trying to set something up regarding trading, because nobody knows what your tolerance to risk is or what methodology might suit you best. You know, we've worked with many traders for many years, and some are still trying to find their feet, but we have to do it in a very conservatively risk-managed way. Ultimately, your success will come down to your competencies, your desire, the continuity of your learning, and the consistency of when you're looking to do your analysis and how you want to get into trading, because it's unlike anything you would have done before. Nothing's ever easy. If it is, it's probably too good to be true. And unfortunately, we can't teach this over a 2-day class or master class, that you'd pay thousands of pounds for. We have an offer, I think a really good offer for you this evening, which we'll show you maybe a little bit later. These offers are obviously sponsored by the broker that we're working with, so maybe that it can give you a better route in for a longer term financially with us. So why do we trade? Well, people want more time. They're looking to create a secondary income. Lots of reasons why. Sometimes when you're older and you've got more time on your hands, you want to keep your mind going and learn a new skill. Hopefully might create some financial independence. Certainly did it for myself. It's good to manage your own money and understand the financial markets. Gives you a sense of an achievement if you do well, and obviously that will increase your underlying wealth pot as well. We never say put all your eggs in one basket. This is high risk trading, and we're trying to do it in a low risk capital managed way. Okay, I wouldn't say anything other than that. Your pension funds and your IFAs, independent financial advisors, will be better off to tell you regarding your whole portfolio. This is trading. We know it's risky, but how can we try and spot profitable trading opportunities? Following our simple and structured trading strategies, you'll be able to adopt that methodical approach, which hopefully will create some consistent returns in a risk managed way. Most importantly as well, what we think is to understand how to manage your own mindset. Very important, because if you don't get that right, you know, you run around with your head on fire, which is no good to anybody. So understanding your mindset and giving you the edge. If you look on the left hand side here, how traders think. Well, they look at indicators, entries, trade management, stop loss and exit. How trading actually works is our continuous learning, trade management and risk management. So, you know, it's nearly 60–70% of this pie chart here. Our entries, stops and exits. So that's part of the functionality of when we're setting up a trade. And we can always, we're never what they call set and forget traders. We would be moving our stop loss to our entry to de-risk as we go along. Okay, so if you're in it, you know, and working with us, we can hopefully point you in the right direction of where you need to be. Once I finish these slides and we go through some bits, we will go through some analysis, and I'll share my screen with you, assuming the platform will let us. Okay, so what should we look for, and how can we try and trade profitably? So when we're starting out, you need to be aware of many factors such as, how to construct a strategy, how to implement a strategy, how to navigate around the broker platform, and also, you know, how you put in a trade, and that's like how you put in a trade, how you do analysis. Learn the basics of trading requirements, what analysis to use. I mean, there's hundreds and hundreds of oscillators, confirmation indicators, ways of putting in trends, ways of utilizing certain technical analysis techniques. You know, you need to kind of, you know, we haven't got time in the whole life to go through everything, so hopefully you would benefit from my experiences of you know, over 30 odd years of doing this, so I can show you the pitfalls or what we look that could end up being maybe time saving and maybe adding probability and a bit more profitable to your trade. It's important to how to manage your capital. You know, if you're trading with £10,000, there's no point putting that on risk. You know, this isn't horse racing where we're gambling 100%. We need to do it in a risk managed way. You can gamble 1% or 0.5% of your capital. You might have 5, 6, 7 trades on, but we need to make sure we're protecting our capital at every instance. You know, even as I've taught and learned as an educator for the last 3 or 4 years, you know, it's to kind of limit our exposure and then manage our risk as we go, looking for the high probability trades. Yes, we have an algorithm, a couple of algorithms, semi-automated algorithms, but again, we overlay that really important manual technical analysis, and that adds to our discretion, allows us to be a bit more bespoke when we trade. Partner with a credible mentor and educator. Hopefully that's ourselves. You'll see I was on the FCA website, CF30, CF1 directors of companies. So we have all the track record there. Obviously, as we mentioned, understanding your mindset and how to cope with your trading day to day. I think trading plan is very important, how to set that up. We can again assist with that with some of our programs. You'll have a setup session with ourselves here, and we'll be able to make sure your platform's going well. We can look at your, you know, talk about your mindset, how you think you've got to trade on, and things like that. Okay, this is just a sample of what should be considered, but let's look at a little bit of some analysis. Very important when we look at trades and when we look at charts. It could be any asset class, because a candlestick, a line bar graph, they are what they are. To understand where we find support, resistance, and what chart patterns we're looking at. This will increase our profitability, and this is how we can trade the markets a little bit more profitable. So support and resistance, one of the most commonly used concepts, not only trading in Forex, but most asset classes, including commodities, indices, fixed income, and cryptocurrencies. Equities as well, independent or individual equity shares, not a problem. What we have to be aware of then is when they're reporting. Are they reporting yearly, half yearly, or quarterly? And obviously when they're paying their dividends. So something very important we need to be aware of when trading equities individually. People can see me about that. So they come in the office and I can teach them what to look at in equities. It's a separate asset class that some people prefer over to FX and the other bits, but we tend to start off on Forex because it's got the volume there. It allows us to place our stop and our target, allows us to trade when we need to. So quite easy in the first instances. We can move on to asset classes as we get a little bit more experience in the trading world. So there are many different indicators, oscillators that are considered. And however, during today's webinar, we'll be focusing on primary three, which are horizontal trend lines and EMAs, exponential moving averages. Okay, there's two types of moving averages, which we'll go through, I'm sure, in a second. So support and resistance, we're trying to define these levels, okay? Support areas, level zones, prices where downtrends are expected to hold due to a number of determining factors, and resistance levels are created when price action rises, hits that ceiling of resistance, and then sells off. Once support or resistance areas have been identified, it can provide optimal trade entry or exit points, execution areas. For example, if something's been broken like a downtrend, saying we've seen sterling sell off recently very aggressively, it's started to rally now. Say sterling Swiss, we can highlight later, is breaking its a longer term downtrend. Could this be a level of where we should get in? All I would say with sterling is don't forget the Brexit factors coming up to the 31st of October. Rhetoric is slightly getting a little bit more favourable for a sterling bounce. Is that a dead cat bounce or is it a solid bounce? We shall wait and see. We want to see how that chart plays out and holds going through, continuing the overall direction of what the breakout is. Most trading strategies that use support and resistance believe that these level zones will hold. Whether it does or not, we in turn create opportunities for traders to exploit and take advantage of. So what we're saying here is once that level has gone, we're looking to put a trade on. I think a couple of you already on one of our programs can identify with that, saying, well, we need to put trades on, we need to put credible trades on, we need to give you ideas that you can actually action and put on. So typically I'll use the daily time frame or even a 4-hourly time frame to make sure I know if people are not at their screens all day every day, they have a credible actionable trade idea to get into. Here clearly identifies the top line here of resistance. We're kind of bouncing like here, throwing a bouncing ball, to the floor, to the ceiling, floor to the ceiling, floor to ceiling. Yeah, pretty much that's showing a little bit of indecision for our price action. Some people like to trade the supports and resistance, and on the break, if it breaks, then we've got another trade to get on. But this slide nicely highlights what we should be looking for in support and resistance. I wish it was as clean as that when we traded, but sometimes it's not. But obviously, we're showing you good examples or perfect examples of things to look for. So in summary, and what we can take away from this is technical analysts use support and resistance levels to identify price points on a chart where price action could hold, reverse, or break out down in the direction of the prevailing trend. Human and market psychology plays a major role as traders and investors will review these levels and the market conditions to forecast potential opportunities and future market movements. Old resistance can then become new support. Old support can become new resistance. Now, these are standard technical analysis strategies you should know and you should learn, and techniques you can deploy in the marketplace when you are actually trading. The more often price tests the level of support resistance without breaking it, that stronger the level is supposed to be. Support and resistance is obviously subjective levels. But when we talk about the price, the more the price test, at some stage that's going to have to break. There has to be a break at some time, and that will happen, and that's where we need to be in with our technical analysis and our price action chart, and two, by overlaying hopefully our oscillators, which is going to make or give us an added probability of what is where we potentially assume the next price action and that price of that asset is going to go. Okay, hope that makes sense. When we're looking at support and resistance, people, the ones of you that know us very well know that I like to use moving averages. They are also known as dynamic support and resistance levels, whilst being laggard indicators. So what I mean by that is by taking prices from the past. So you can have moving averages over 10 days, 2 days, 5 days, 200 days, which is one of my favored ones. Okay, and we'd look to see where it was within that kind of area. Moving averages will act as or can act as good support resistance areas. However, the only problem is figuring out which style, type, and time moving averages to use. As said, I personally favour a 200 longer term time frame moving average because I like to see the body of a candlestick actually close above or below at certain levels, and that they can become quite profitable trades as long as we're managing our stop loss and we're managing the chart set up correctly. So the key takeaways from the moving averages support and resistance. Note there are many types. Okay, we don't have to be a busy fool by testing everything all of the time every day. What you need to do is take advantage of myself and Kevin, that we've tested many of these things over the years, and we've come down to certain ones that we like, and we're happy to share those to people on our programs. The two most common moving averages are simple and exponential. Simple just means they're equally weighted. So if you have the 10-day moving averages, it takes 10 days of equally weighted price weighting. Exponential applies weighting factors which decrease. So for the nearer the price action, it creates more credibility, or uses more of that price action, which I quite like, because it means if you're using a crossing network or anything like that, it moves slightly quicker, so it gets us in slightly earlier. Using two moving averages can define support and resistance and create a zonal area. So trend lines, most of you understand trend lines, which is good. We've seen many of those happen during the time. So when we look at those, it's important to identify how we structure those trend lines. Okay, they're very underutilized within technical analysis, and for us, they help create the framework to our trading strategies. If they are drawn correctly, they can be extremely accurate. Unfortunately, many traders and investors don't draw them correctly. Instead, they try to make them fit within the market and their pattern. And if they have a trade on, they go, well, I am right. The trend line is this. We set a trend line, and then we let that trade accordingly. An uptrend is a line drawn along the bottom of the price action with easily identifiable support areas, which are also known as valleys. A downtrend line is drawn at the top of the price action with easily identifiable areas of resistance, which are also known as peaks. And there are three types of trends: uptrend, sideways, uptrend, downtrend, and sideways, or range bound. Like where we showed you support and resistance, it was just vertically going up and down. We prefer to trade with the trend or with the breaks, or if there's any areas of support and resistance, can identify where we can get into an added probability trade. So here we see an uptrend. Okay, it's bouncing off this trend. We want to see three touches to establish a trend. And a downtrend, we draw from the top to the bottom. Okay, and it's important that we get those right. So an uptrend, we draw from the bottom to the top. Downtrend, we start from the top down to the bottom. Okay, and you see where that resistance is. If it breaks, then we look to buy and get in. Okay, if that breaks, then we look to sell and take a short trade. Okay. Our summary and key takeaways from trend lines is: make sure you draw the trend lines correctly, please. Two major points at tops or bottoms can be established too. We want three touches that are needed to confirm a trend line. The steeper the trend line usually means the less reliable they are. So 45 degrees is quite nice. Anything about 60, things a bit more steep, it's more likely to break, and probably be more of an aggressive break in our experience and opinion. Trend lines are known to become stronger the more times they are tested, just like horizontal support and resistance. And how good is it if you're long of something and you've bought something and you're in an uptrend, it keeps testing that trend line and then keeps going. So it allows us to stay in trades maybe a little bit longer, which I think is always a good thing. Yeah, we don't want to be busy fools, and we don't want to be over doing too many things at too many times. Okay, and trend lines right at the bottom there, they do evolve with the market day to day as the price action goes along. So when we talk about chart patterns, they're considered the most effective trading tool within the trader's armory, especially within our Intelligent Trading Academies community. Chart patterns repeat themselves in the market time and time again. And once understood, are relatively easy to spot. Takes a bit of time, bit of experience. That's what we can show you here, is how to define, how to look for things. You know, and I say this all the time, I can't teach in a day. You know, the best I can do, you know, we have an offer tonight which will take you up to 6 months very cheaply, because we can do a deal that, you know, some of the broker will sponsor some of your education, which is very nice of them. Our community use chart patterns to identify continuation and reversal signals to execute our trades and identify potential price targets through forecasting. So when we take continuation trades, we're looking for patterns that are continuing in the bull trend. If they're bullish continuation patterns, or if they're reversal patterns, we're looking for that actual trend to have actually been broken. The ITA pattern blueprint, we focus specifically on the most commonly patterns utilized within the ITA community, and this will provide you with the patterns you should keep an eye out. We're not trying to over work you. What we need people to do is to understand the basics of trading, you know, what the market professionals are looking at, you know, in my opinion, on Kevin's opinion, how we've managed to create that trade idea so you can actually find it for yourself, you know, and do trades, you know, going solo. That's the idea of education, is actually, you know, when I learned to drive, I didn't stay with the same driving instructor for the rest of my life. I learned to drive over a period of a year or whatever it was, and I managed to pass my test and my exam to make me competent at driving, and got better of it. Well, some might say not, over the years that I've been driving. Similar with your trading, if you commit to it and you work closely with proper traders, then you will have a better experience, no doubt about that. So chart patterns, we can use bullish and bearish flags. I know some of you would have seen those before. Very simple, nicely in an uptrend. Can you see we get an impulse, then a period of a corrective phase or consolidation, then we get that sharp breakout. We like to see the sharp breakout. This is our entry point. We would look at other oscillators. We would use these in cooperation with some other factors as well, which we will obviously teach you. In a downtrend, you get that big impulse, then you get that corrective phase, then you go, uh-oh, it continues. Yeah, that could be like a longer downtrend like that, something like that. Also, you've got things called expanding wedges. Yeah, look like megaphones or things like that. Again, working, continuing in the uptrend or the downtrend. Ascending, rising wedges, you've got this kind of area where it's closing. The price action has to go somewhere. We want to see something like that. Okay, good to highlight those patterns as we go. And a descending falling wedge will be a bullish pattern at the end of it when we break to the upside. We want to see that kind of closing, you know, similar to a flag or a pennant, but the price action really has got nowhere else to go except for spring to the upside. There will be other things we're looking for in conjunction, but they're quite common in the marketplace and common in the price action. Then you see you get equidistant ascending channels, and you get the descending channels. So all those kind of things we can help you with as you go along. So our exclusive limited webinar offer for tonight is 6 months education partnership, access to our training strategies, unlimited access to our midweek market review. We report those once a week. You get weekly and daily market analysis. You get the trade ideas through our Pro Trader Skype chat. That's a real lifetime Skype chat. You get your trader email correspondence, and you get your online or face-to-face individual assessment. And then in that session, we will set you up with how the charts should look and everything that you need to make you hopefully a competent and better trader. So with that, we would probably put in our algorithms to you and by creating these will allow us a good entry or a decent entry on some standard rules that we don't need to look at all of the time. It needs to be back tested and then shown, and you'll be shown how to implement that into your system and platform. Let's see if we can look at some examples in a second. One of the ones we use here is our bespoke FX fast track momentum strategy. It's semi-automated algorithm enhanced with manual analysis, which we will educate you as you progress. It's multi-asset class and multi-time frame. So I would tend to use it for the daily, 4 hourly and the 1 hour time frame. Note, if you're using the kind of 1 hour time frame, you need to be at the screens regularly, because obviously you get a new candlestick every hour. Unlike every day, we're trading a daily candlestick and watching that setup as the day goes. So if you've got time at home to watch your trading screen, then an hour time frame is fine. Slightly different mindset for that. Psychology wise, you have to make sure you could be doing quite a few trades if you're looking at setups every day. On the daily, slightly more relaxing, because you can go to sleep. The setup and your stop loss is all in place. So something like this, we look at sterling yen recently. Looks quite nothing much there. You can highlight some resistance areas. Our analysis and our algorithms will tell us we have a buy there. That's our opportunity. Sell here. This is our opportunity. Okay, buy here, our opportunity. Sell here, nice opportunity. There is reasons and ways that we can teach that, but you've probably got 4 or 5 good entries and good profits. Some of them 3, 4, 5 to 1 particular trades if you are patient. Okay, because this trade, say the last one here, is back from April to July. So you've got to think, and now that is probably breaking to the upside because of this spike here. You've probably got a higher low, so it's saying, well, maybe that's a bit more secure than what it was, and we've got some positive momentum now being shown again. Tried to tick down, but it hasn't, and it's tried to tick positive there. But again, there are rules. There's other ways of looking at stuff, and there's other ways that how we can highlight added probability. And definitely, what we don't want to do is you to set up a trading account and obviously give your money away because you're over risking and you're not managing that capital. It costs us a lot of time and sweat and toil to get money under our belt. So what we don't want to do is give it away by silly trading. Let's have some confidence in trading. Let's learn some techniques, and for you, let's make sure you learn some added areas of analysis, which is going to give you enhanced probability of a successful trade. If you're patient, if you're consistent with your analysis, and if you work closely with us, we can do that. Okay, so it's 6 months, access to our trading strategies, unlimited access to midweek market review, our weekly and daily market analysis, trade ideas, pro trader Skype chat, trader email correspondence, and online or face-to-face individual assessment. And that's great. You've got access to the traders here. It's Kevin and myself at the moment, and we do have an office in Munich, soon to hopefully open in Madrid. Excuse me while I take a drink. So plenty of resources to give you a great experience over a long period of time. Okay, this won't be thousands of pounds. It's in the hundreds. So don't need to worry. If someone wants to charge you that, luckily we've got a good sponsorship with these guys, ATFX, who are going to kind of sponsor some of your course costs, or cover some of your course costs with us just for today. Also, you'll get our ultimate Forex trading guide and our pattern blueprint. Okay, we can get you those. So our webinar offer today is 6 months, as we said. Okay, with our bonus offers. Originally it's 2,995 plus VAT. Tonight it's 595 including VAT. So a huge discount there regarding the offering for our traders this evening. Happy to go through that with people. If you are interested, obviously pop your name on the chat, and we'll get something out to you very quickly. If you don't put your name on the chat, you might miss out, because obviously these are limited, so we can't give these out to everybody, I'm afraid. So again, it's just that's all we're asking for. It's not you know, it's not a life 500 quid is not a life-changing amount. It's an amount that we need to make sure we think we can offer the longevity for 6 months, giving you enough time to get yourself up and running within trading by talking to us professional traders. Okay, we happily chat to people about it, and we'll be in touch about how you sign up. It's not a problem. We can help you at every stage of the way. It's good to, so we trade with ATFX. Good trade, good nice traders there. We can put the link if you wanted to sign up. I might be able to get the link for you. Let's have a quick look. I can put the link in the chat, don't worry. I can find that for us as we go along. And this is our good selves. So this is myself, Kevin. This is where we live. This is a view from our office. We haven't made it up. You can come and see us. Some of you that have already been here are great, and you really enjoy that. I have to read a disclaimer and a risk warning, unfortunately, but it's all good to know. This information has been produced by Intelligent Trading Academy Limited for general information purposes only and is not indicative of future results. Societe Global Markets UK Limited, ATFX UK, takes no responsibility for its accuracy or completeness. Any opinions expressed do not reflect those of ATFX UK. This information does not take into account your personal circumstance or objectives, should therefore not be interpreted as financial investment or other advice or relied upon as such. You should seek independent advice before making investment decisions. Reproduction of this information in whole or in part is not permitted. Risk warning. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 72% of investor accounts lose money when trading CFD spread betting accounts with ATFX. You should consider whether you understand how CFDs spread betting work and whether you can afford to take high risk of losing money. Okay, as we mentioned, there is high risk, but we're only going to be risking 0.5 to 1% of your account size on any particular one trade. So we don't have clients that end up with loads of margin calls and things like that. So for us, we're trying to give you a stable route into trading without blowing your accounts and trying to get this area, the 72% of retail investors, up, into the 60s for ATFX. It was a lot higher than that when we first started working with them, but now it's 72%. We're trying to help the industry and help them by giving their clients added value and a more stable way of entering the financial marketplace. Okay, so we're asking you to inspire, guide, and involve with ourselves. Get yourself involved with us, and we'll happily try and help you as we go. What I wanted to do just before we finish off is to go to my screen and to show you some stuff that we're looking at. Okay, so here I'm just going to show you. Hopefully you can see this screen. I'm going to show you my monitor up here. Okay, hopefully you can see that screen with my trades, with the bits that we've got on there. You can see we've got 3 sterling trades on. I wanted to look at sterling Suisse with you on the daily chart, so I would move that from here. Hopefully you can all see what I'm doing. If you can't, shout. Sterling Suisse here. This is our little algorithm. Okay, slightly similar to sterling CAD. Yeah, a break of a trend. I show sterling CAD because it's gone slightly higher. You can see we're moving our stop up as we go as well. We could just drag that up and move our stop. We're de-risking. I'm only losing X amount now, 0.5% of my account size here. Sterling Suisse looks the same. Okay, we've just seen that break there. We need to get in. Our momentum is positive. We're positive there. Our algorithm has started. I would rather wait for this close or this candle to cement above the trend line. If it breaks and goes too fast, oh well, you've missed it. It's the way it goes. But we're not we want to be risk averse traders, not high volatility risk or risk volatility traders. We want to make sure we're in there making stable adjustments to our trades and proper trades when we look at it. We've also looked at, if I show you, I think it will be on here, Euro Sterling, just basically how we kind of set this one up on a weekly. Sorry about the rogue lines here. We'll just see how easy it is to navigate around the system. Okay, this is the weekly. Okay, this is the weekly chart in Euro GDP. What can we identify here? Well, we can identify here there is a resistance zone, okay, or resistance level. Every time it pops into this level here, we can see that comes back. It looks like it's coming back lower. Okay, so that could give us added probability or added confidence when moving forward. So we would drill down to the daily. Let's have a look on that time frame. Okay, so on the daily, that trend line is now being tested. Okay, we actually got into this trade on this little dot switch, which are called parabolics. Okay, thinking that if this holds here, we'll buy it back for a quick profit. If it breaks, we'll let it go. Okay, because this could be a 2 or 3 to 1 decent winning trade based, as I click on now, the weekly chart. The reason we've placed our stop just above that resistance zone gives us added probability that it won't get touched. The reason we've placed our target just above the 200-day moving average is we know that's a potential area of support. We can review it when it gets there, but that's us being proactive traders and us guiding you as you go along. Okay, so anyone who would like to see or like to contact us, one sec, I think somebody's popped. Raphael, if you've seen anything, can you see it? I'll pop in there. Can you see now? Hopefully you'll be able to see that. Let's hope you can see that, Raphael, what I've sent back to you. But on the weekly, we've just priced our target down to this 200-day moving average line. Okay, and we know this area of resistance is very important and vital. It's now breaking its trend. Good. The parabolics on the weekly have reversed. Good. So everything is coming to fruition in that trade. And that's us doing things for the right reason, technically. Okay. We also know that sterling has, been a sore performer, a disappointing performer because of Brexit. Are the fundamentals and the rhetoric slightly changing? I think they are. They seem to be, as our new Prime Minister Boris Johnson has got involved, there seems to be a different tone, a softer tone coming from the EU. Won't happen overnight, but they will want to do a deal, no doubt about that. And Boris has gone in saying, look, we don't want to leave without a deal, but we're prepared to on the 31st of October. Well, that's how whatever your thoughts are, that's the deal we've got, or that's the here and now of what I summarise it to be. Could change on a spin of a coin. Note as well, when we're trading, Trump's tweets don't help us. That's extra volatility we do not need in the marketplace, but he's happy to provide it. This is the luck of the draw if something goes your way when he tweets something. You might be long of equities in China and the US agree a trade deal. We know they've been battling that for months now. It's just added volatility with equities. So you've got to obviously make sure we're not over committing our capital and over risking at any one time. So that's euro sterling. If we look at some of the dollar pairs that we've probably seen recently, so going back, you can see all these, sorry, let me just say, you can see all these little arrows. We don't take all those arrows, they're just an alert. Our eyes are our trigger. Our manual analysis will help us get in. Okay, there was a nice one we were looking at today here, dollar yen. I would help you. I know it seems like I'm clicking a lot and there's a lot going on, but I'll help you get through all that, how we go through this platform. That's not an issue, but you can see here. Okay, let me just pop this shaping. Okay, you can see this green candle here. That was red this morning. The actual, what's happened here is we've had price action below our 200-day moving average, just testing that parabolic, but we've placed our entry level just slightly below it because it hasn't ticked and reversed yet. So it could be there could be a failed entry here. Tomorrow the parabolic will be slightly up. We'll move our entry to that level. We can see momentum's waning at the same time. This trend is breaking, but at the moment that was a good save. We didn't sell it there and then see it go back up. Okay, we're now in the realms of, well, it's still a potential entry. again, for us on the daily time frame, we can then review it as we go. I do have, let's have a look. No, still only, where have you got here? You saying, are you looking at, is this what you can see? Raphael, can everybody see this now? Or is it now blank? Ah, you can see, you can see this now, yeah? Okay, but you can't see, can you see the US dollar CAD one now? Hopefully you can. I'll just check the screen that we're showing. I'm pretty sure. Okay, can anybody see this screen now? This is our, can everybody see dollar CAD? Yeah, right, okay, good. This is dollar CAD, which we were talking about. Our dollar CAD price action has now gone above the 200-day moving average, negating our potential entry because it hasn't been confirmed. If there's no entry confirmed, then with nothing done. There's nothing to be done. So we won't be doing that until we get a credible entry, until our analysis and our eyes have told us now's the time to get in. Okay, sorry about that problem earlier. Hopefully you can see that all now. We also trade oil on the same basis, so we can have a quick look at that. Nice in oil. We can see we're in a downtrend. I would take my trend line shorter term from probably here at the moment. Nice 3 touch. We could close that as 1, a 2, and a 3 a touch. Ignore that presently. We're looking at the daily. Yes, we're getting a little bullish tick up, but we know we're in a downtrend. So what did we say earlier? We prefer to trade within the trend. Not a problem. So we're looking for the next sell trick. Can we see as well? It's broken its 200-day moving average. Resistance further lower. Resistance on the trend lower. Resistance on the trend potentially lower. We need things to stack up, and you will learn the rules as we go along. It's not a problem. And gold obviously is rocketed, you know, recently, and we would like to see. We did have a little stab at a little short at the highs here, but again, the technical analysis here. Can you see where that kind of pattern was kind of where we showed you that kind of the patterns where the price is kind of is getting closer. It's now going out, and it clears a nice trade here on new bullish momentum. Look at that. The uptrend is intact. There, here, high, low, higher, and yeah, high, low here, high, low here. Off it goes. That's protectionism. People like to buy gold when things are looking a bit rocky, volatility wise and equity wise. We can happily show you how to use those techniques. Now, if you were long of gold since the 31st of May, 1318, and you're now playing at 1541, you've had a Bitcoin experience in gold. So there's no need to sell that. There's no need to sell that yet. We haven't had a sell trigger. We've had just our last buy trigger told us to wait. No sell triggers in between just yet. Potential confluence there, but nothing didn't stack up all in one go. So we need to do that. And obviously we trade silver, same kind of thing. It's going to say the same as gold. One thing else probably just to look to show you would be cable. Okay. We can highlight, you can highlight a trend from here, but you know, it doesn't show 3 touches, does it? So let's bring it down the next level. Your highest point here. Hello traders, we are looking at a potential break on this particular trend line here, with this area 127.20 being a potential resistance. Okay, so we could look at that positive momentum. The trend we want to see the candle go above, similar like the one we had in sterling Swiss. Sorry for me messing about with that. I'm just pressing the buttons 100 times. Here, break, further upside. Break, further upside. Historic repetitive patterns are repeating themselves. Okay, so all in all, what we've shown you here is some good action, some good price action, and some credible trade ideas. And I hope you'll appreciate that as we go. So again, I'll just share our last offer that we have for you. And if you are interested, you know, we will be in touch just for following on an email, or you can just let me know in the chat. It's not a problem. It is exclusive to the webinar offers for ATFX customers that have subscribed to this particular webinar. You'll get 6 months with us, access to all us bits and bobs. Typically it's 3,000 plus the VAT, but tonight it's only 595. We'll be happily take orders and give you a link if you wish to have a link. I can put that in a chat for you. Let me have a look, see if I can just let me just see if I can grab a link for you guys regarding where we are. Let's have a look. Let's have I'll put that on here. It will be a link for our website, which is intelligenttradingacademy.com, and you can see the price of our 6-month course. I've put it on there under one of the programs, so everybody can link in and just click online and get on with it. It's not rocket science. And the reason we're offering it at this price is because we feel it'd be our FX, one of our FX Pro courses, because we feel we can do that over a period of time for you guys to make sure you can learn and earn as we go. Okay, I've put it into the chat here. Okay, and also I'll put it into the other the questions chat as well. Obviously happy to show everybody and talk to everybody a bit more. We will be in touch following this webinar. I thank everybody for their attendance. I look forward to meeting some of you very soon. If you do have any further questions, you can email me at info@intelligenttradingacademy.com. I'll put that into the chat as well, and I'd be more than delighted to speak to you and talk about you coming on board and trying to help you out with your trading. Also, there is a potential for those who complete are successful and show they are committed to be offered the chance to participate in our funded accounts. I know some of you already have details of those, so hopefully you can all see those email addresses and links to the FX Pro 6-month program. Again, thank you ever so much for attending. Very much look forward to speaking to some of you in the near future. If you do have any questions regarding anything we've spoken about this evening, please contact me at info@intelligenttradingacademy.com, or my personal email is adrian.slack@intelligenttradingacademy.com. Have a lovely evening, and I look forward to you to the next time when I host one of these special events for ATFX. That's me signing out. It's Adrian Slack at Intelligent Trading Academy. I wish you a very successful, safe and happy week. Good night, everybody, and speak to you soon. Bye-bye.